Very good morning. Thank you so much for joining us. You've recently bought that land in Gujarat, have a Capex plan of 30,000 tons per annum. Just wanted to get started with talking about that. So what's the intended timeline to start construction on this newly transferred land? Any regulatory hiccups that you might be facing? What are the timelines looking like?
So we have acquired 9 acres in Rosari Biotech, which is adjacent to our plot, and 3 acres in Unitop. We have got permissions and transfers from GIDC for both the plots. These are all for future expansion. So the existing expansion for which we have taken board approvals, and informed the exchanges is already on the existing plots. The new plots expansion is is on the drawing board. We're waiting for the existing capacity to be used up, and then we plan for expansion. Getting land adjacent to our plot, to our land is not so easy. And when we got it, we grabbed the opportunities for taking more land.
But if you can take us through what exactly is your plan over here, how much will capacity increase by as a result of this particular capex plan, and any other plan that you have other than the land you have acquired this for?
So, if you see, last quarter we had a 15% plus volume growth, and this is the land for Unitop would only be used up when we have additional EO from Reliance. And we are expecting more EO from Reliance from their expansion in the month of September 2026. So before that, we will, map up the plans, because in the past it has been delayed. And once we get that, then we will do it. And in the 9-acre plot for Rosari Biotech, we already have an expansion at the existing site, underway. We'll see fruits of it, and and then do it. We always have been very conservative, never have been over leveraged. Always followed practically less than 1x of EBITDA as debt. So this is the ethos which we want to carry. We earn and we redeploy whatever we earn.
And since we're talking about capacity expansion, just wanted to take your view on export strategy as well. What kind of incremental capacity is expected to be allocated for export-oriented projects?
So our focus is exports, growing. If you see in the first half of this year, we were about 30%, in exports compared to the last year when it was 27%. Last quarter also, our exports was nearly 30%. We would like to grow exports substantially, but the domestic market also seems to be picking up now. And we think, it will be in the range of 27 to 30% exports. Of course, we would like to target a little more of exports.
Okay, so 25 to 30% exports, and which geographies are aiding this demand? And if I can understand, as a percentage of total revenue, how much do you generate from exports? Is that 25 to 30% what you're talking about, or is it volume guidance?
So if you see, our exports is, equally divided in US, LATAM, the Americas, in terms of, MENA region now, in terms of Europe, and then the rest of the world, which we classify. Our focus would be to grow nearby areas, including MENA. The MENA region is, the Gulf, where we're also trying to, do some expansion for the future. But Far East and the Southeast Asia are areas, and the Gulf areas are something where we are focusing very hard.
And what kind of a target mix are you looking at when it comes to domestic and export projects?
70% domestic, 30% exports is our target.
Understood. 70% domestic, 30% exports. But what's the situation when it comes to domestic demand? Because I understand you did tell us that export demand continues to remain very solid, and consequently, as a result of the kind of outlook we have for domestic demand, what will your revenue growth guidance be for the second half of this year?
So as a target, we had targeted 10% growth in EBITDA for this year, and I think we are on track to get a 10% EBITDA growth this year.
Are margins sustainable around that 12 to 13%?
Yes. So if you see, our B2B margins for the historically 28 years has been around 15%. Our consumer businesses are taking away some of those profits. Once we remove the consumer businesses, it is 15% always for all the 28 years. Like we have been, a profit-making company all the 28 years, dividend paying all the 28 years. Our B2B, business has always been around 15%.
Okay, and since you are telling us that you'll be able to achieve that 15% EBITDA growth, is it fair to assume that you will be achieving 15% revenue growth on the top line as well, as compared to 2,100 crore of revenue that you reported last year? Will 15% bump up be a fair estimate for this year as well?
Focus is 10% EBITDA growth over last year. So 265 crores was our last year's EBITDA. So we should do 290 crores plus is something which, we are confident on for this year.
And since we are talking about guidance, just wanted to understand what's the expected Capex spend distribution across FY26 to 27?
We do not have any, Capex plan for, which has been approved by the board for the year, 26-27. This we hope to do in the next 3 months, but it will not be too much Capex in the next 1 year.
And since we were also talking about export opportunities, I believe you have also made some investment in Saudi Arabia subsidiary. What kind of opportunities do you then see in the Middle East market? And because of this investment, how much additional incremental revenue do you aim to generate?
So Saudi, we are still evaluating opportunities, like all other opportunities, and we have taken board approval, for some investments there for preliminary study and survey of the market. As soon as we finalize our plans and get board approvals, we'll surely share with all of you.
And talking about segments, home, personal care, they contribute a large segment, nearly 80%. So is that trend going to continue, or are you looking to expand the contribution of other segments, textile and animal health?
So we expect, because the total addressable market for our home, personal and performance chemicals is very big compared to textile and AHN. The textile and AHN markets will definitely grow, but we expect in the next 5 years, with what we have planned as a budget for the next 5 years, it will be 90% plus in HPPC.
Mr. Charu, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is going forward, especially when it comes to export market. Thanks so much for joining us today.